Well, hello everyone. Welcome to Getting Started with Technical Analysis. We're in the middle of our price patterns series, and today we are talking about pennants, my friend. So I'm glad you are with us. I want to thank those of you who are joining us live, but I know that the majority of people that will see this are coming to us from the recording, watching this in the archives. So if you have a question and you're watching this in the archives, you can type it into the comment section. I do look at those, on a daily basis, and I'll get back to you relatively quickly. For those of you who are here live, I thank you for being so participatory in the chat. So hello to JD, LMI, and Paul and Josh and Becca and Trader and the rest of the gang. You can certainly ask questions as we go along. So, and then we've got Connie Hill with us in the chat. She's a friend and fellow coach. She knows all this stuff inside and out. So don't hesitate to ask questions if you have any. Also, make sure you follow us in the land of X, my handle at Barb Armstrong CS, Connie's at Connie Hill CS. And then I am now on LinkedIn as well. So you can find me over there in the land of those who are LinkedIn if you'd like to, see what I'm doing over there. Connie, are you on LinkedIn as well? If you are, just type in your handle over there, and so they'll know where to find you. Okay, so as we get started here, know that everything that we discuss in this class is for general information purposes only, none of it to be construed as an individualized recommendation or endorsement of any particular stock, and we're going to look at a bunch of them, or chart pattern or investment strategy. Okay, we will be using the paperMoney software application on the thinkorswim desktop platform, and it is a brilliant place to learn to make sure that you understand your trading strategy and understand how the platform works before you consider trading in your live account. Just a reminder, whether it's paperMoney or a live account, with a stop loss order, it doesn't guarantee that you will get out at the price you requested. You could end up out at a much lower price if the stock were to gap down, okay? So this is taught in a 9-week rotation, and I would say it's loosely taught in a 9-week rotation because every once in a while someone will fill in for me, and that might count as a bonus session. So they might talk about Bollinger Bands or Fibonacci's or any number of other technical analysis patterns. And then, so we usually will add 2 or 3 bonus sessions. Sometimes they're at the end, sometimes they're throughout. And I like to throw in one called The 8 Things I Wish I'd Known About Trading When I Got Started. If you haven't seen that one, you can go to the playlist for this under Trader Talks from Schwab Coaching and check it out. But today we're talking about pennants and triangles. And if you don't know what that is, well, you're in exactly the right place because we're about to discuss it. What a pennant pattern is. We're going to look at several examples, and then we're going to place an example trade. And discuss, how we can look at these patterns. So a triangle pattern occurs, and it can be bullish or bearish. And it can also occur in any time frame where we have, kind of a change in trend. And in this example, we're seeing a stock that had been uptrending, and we have a new high, and it comes down, and we see this isn't a higher low, it's a lower low. And then we rack up a lower high, and then a higher low and another lower high. So this is forming kind of a coiling or a consolidation pattern. The way they describe it here, it's a strong trend that consolidates with converging support and resistance lines. And what a trader might be looking for is a break either to the upside or to the downside. And if it breaks to the upside, then this was a consolidation and a continuation pattern. If it breaks to the downside, that might be an indication of a trend reversal. And if you're looking to place a target on this, so many would measure that by coming here. Let me just change my drawing tool. Saying, well, like if this is about $10 wide, then when this breaks out, I'd expect a move, about the same to the upside. And that might be where I put my target. So if it broke out here at 50, target might be up here at 60. Easy peasy lemon squeezy, right? So we'd look at the width of the triangle added to either resistance if it's bullish, or subtracted. So if it had come down here and broken out to the downside and say this was 45, then our target might be down here at 35. I'm just trying to be consistent with my little drawing tool here. Yeah. So, and you know, these can look different ways, and they can say, you know, well, this is an ascending triangle or a descending triangle. And, you know, but the net of it is when we look at this pattern, what we are looking to see is this series of lower highs and higher lows, or it could even be similar lows and lower highs, or it could be similar highs and higher lows. But it's an interruption of whatever the previous trend was, or a consolidation, if you will. Okay, so let's go out and look at some charts. So, well, first up, we have Lam Research. And we can see here's a stock that's been on quite the tear, right? Like it went like a whole lot of nowhere for several months. You know, it had a low here in the last 9 months of 79.50, went up and hit a high of 251.87. But when we zone in on this, what we can see, and some like to draw from the top of the body, others like to draw from, you know, the top of the wick. Either one will work. But, you know, if we start here and kind of come down, we want to touch as many tops of candles or wicks as we can. We can see that, you know, we've had quite the uptrend, but now we're seeing, you know, kind of a lower high here, even though we're still seeing higher lows. And so we're looking for this to break out above this diagonal resistance line. And so, you know, if we're doing this and we're saying, well, you know, we're finally getting snow here in Utah, I might want to ski tomorrow. Just send me an alert if this goes above 240, you know, kind of above this line. So we're going to come out here, and we're close to that now, but just say, I'm going to create an alert, say, hey, if this goes above that 240, 50-ish kind of mark, let me know. And you can put a note and just say bullish trade, maybe a swing trade. And you know, what's a swing trade? It's where you buy a stock or the option to say, hey, if it breaks above 240, maybe I'll just put in a target at 250, the previous high. And you might say, well, why don't I do that now? Like, why wait? I could make more money if I bought it at 236.96. You could, but what if it doesn't break out? Hence the alert. Okay. And so, and if it does break out, where might we expect it to move? Well, we might say, well, here's the height of this pattern. You know, here was the low around what, 205, and the height of the pattern was 250. So we'd add 45 to that. And so if we added 45, if it breaks out here at 236, and we add 45, that would be our target here would be around 280. So we could do it that way also. We don't have to do it as a swing trade. This could be our pennant target. Or our possible. Okay, and do you see how I got that? And we can actually just draw a line here. Say, you know, if I came from here to here, how far is that? It's about $46. So if we take then that 46 and we add 46 to that, 236.87, you'd be up here around the 280 mark. Okay. Okay. Let's look at Apple now. So Apple also had a nice run here, and this is a 9-month chart again, went from 193 up to 288. And, it hit 288 and it hasn't got back there since. After a series, when we talk about trend, this was your typical trend, right? Higher high, higher high, higher high, higher high, higher high, higher high, higher low, higher low, higher low. And then all of a sudden, you have a series of lower highs. But when we come out here, and again, personal choice, we're setting up a bit of a pennant here or a triangle. And so you might say, well, aren't we supposed to wait for it to break out? Well, that's one way to trade a pennant pattern. Another way might be to say, hey, like today it's up almost 4%. So big move to the upside. But the last time it had a few big days, it kept on going right until it got up here. So could we buy some shares of stock and put a target up here around, I don't know, 276? That would be $11. And you might say, well, that's not much. Well, one, it beats a poke in the eye with a sharp stick. But if you took 276 and, you were up $11 and we're buying it at 265, that's still a 4% return. And if you're buying the stock, and how long might it take to get there? Well, it could take a week. It could take, a few days. It could never get there. And then where might you put your stop? Well, you might say, well, I see this as a diagonal support line, right here around this 257 mark. So I'm going to take that 257. We're going to change that to a calculator. So 257 times 0.97, I'm going to put my stop at 249. So if it comes down here to 249, not going in the right direction, but it gives us enough room that if it just comes down, we don't want to get nicked out on a wick, right? Okay, and then our target is going to be 276. So if we came to our trade tab and we wanted to place that trade and just use the stock, we could say we want to buy custom with an OCO bracket. We're going to buy 100 shares of stock and we want to sell when it gets to 276. Or now if it comes up to 275.89 and then sets up like a shooting star type pattern, or some type of pattern that indicates that this uptrend, it may be bonking its head and about to roll over, can we go in and change our exit? Sure we can. We could say, hey, I'm within 20 cents of my target, or 50 cents. I'm going to take the money and run. So 0.97 means that you're putting your stop 3% below a recent support level. And that's why we multiply by 0.97. You're taking essentially 3% off that support number. Now, some might want to use 2, some might want to use 5, some might just want to eyeball it. You can kind of do it however you like. So we're risking here 16 to potentially make 10. And some might say, like, I'm not willing to do that. And that's totally legitimate too. Like they might say, I'm going to make that a 2% stop. But if you're confident in your technical analysis, and sometimes things just don't go your way, but if you're okay with that, we're risking 1,600, which in our $500,000 account, we're okay with risking. We're willing to risk up to 2,500. So we're going to put that in our stock with a target, and then, it's a trading to resistance. That's just a note from us to us. Okay, so that's Apple. Okay, sorry, I've got my little list of stocks here that I looked up beforehand. Okay, how about Albemarle? I always have trouble saying that. I feel like I have a mouthful of marbles when I'm trying to say Albemarle. But do you see a trend here? Like, oh my God, this went from 53 bucks in 9 months up to almost 200 bucks a share. And now it seems to be like stuttering a little bit, and, we had this high and it's kind of consolidating, right? Like, and what you're trying to do is just touch as many candles as you can. So we're touching 3 candles here. We're just looking for it to break. So, could that be a break tomorrow? Might some consider it to be a break now? So some might look at this and say, hey, Friday's candle was a harami and it's continued to the upside. So I don't care about your stinking pennant pattern. I'm going to trade this now. And you know what? All I can say is be my guest. Some might say, I'm going to put this on my watch list and maybe I'll come back and look at this again tomorrow. Cue the song from Annie, right? Tomorrow, tomorrow. And it's not trying to kick the can down the road because you lack confidence. It's saying, I'm making an informed decision given this pattern. Yeah. Okay, so we're going to look at Boeing. We're working our way through the alphabet here. So, in our trading a smaller account, we already have a couple of trades on Boeing that we put on this day. But, as it turns out, this thing is setting up a bit of a pennant pattern too, isn't it? Oh, wherever we want to start from here. And so, for our trading a smaller account's sake, we're hoping that this harami pattern really does follow through. And it has so far. We had this candle of indecision at a support level, right? This doji pattern. And if you're new to candlesticks, I just recorded something on dojis. And if you want to see that, it's in the Getting Started with Technical Analysis series. But if you come to Trader Talks from Schwab Coaching, and if you haven't subscribed, you'll definitely want to do that. It's free. It's not like 30 days free and then it kicks in at $9.99 a month or anything like that. It's free now and free forever. And it's on YouTube. But if you scroll down, there are these trade management mini sessions, and that's basically just a folder that I set up. And if you click on that, the reason I'm pointing this out is because we're able to group these. I need to go in and get them to change this and make this like have a number 12 and a 13. So there are 13 little snack size videos about candle patterns. This is probably the longest one at 5 minutes and 56 seconds, but some of them are, 3 minutes long. Well, here's one that's 6 minutes. So they're kind of between, 2.5 and 6 minutes long. And, here's one that's 2 minutes and 13 seconds. So, you can do a bit of binge learning if you're newer to candlestick patterns. And so that's under the trade management mini sessions. Okay. So I bought 100 shares at one price. So I'm responding to a comment from High Spirit. So when we look at the trade we just placed on Apple, so let's come back to Apple. So we placed a trade and our target on this, I think it was 276, wasn't it? Our target's 276. So if we want, we can draw our target. So we just bought 100 shares at one price. And then here's our target at 276. And then we put an exit at 249, 249.29. Now, again, like with the stop loss, there isn't a guarantee that if this gap down, you could end up, out at a lower price. But that's our stop loss order. So, and we bought it today at the current price. So we could put a little circle around that to indicate when we bought it. So this is not, we're not putting a ring on it. This is a short-term trade. Our goal is to get out when we've made a little bit. Now, could we, do this as a long call vertical? So somebody's talking about options here, but with the option, a long call vertical, if you're thinking it might come back down, I guess if you could come below here, that might work, but you might rather do a long call with the same kind of target. And in this case, you would come out to maybe April. Even though our expectation is we're only going to be in it for a few days, at the lowest least amount of time, you'd want to come out to March. But our time decay is going to be more of an issue in March. So if we look at our time decay here, on the at the money strike, we're losing 14 cents a day on this option, where the same strike, you're only losing 10 cents a day, but you're paying more for it. But that means that 10 cents has even less of an impact percentage-wise than the 14 cents does on the lower option. And so if we come out here, and we're saying, well, do we have lots of volume on these contracts and a tight bid-ask spread? We do. So we could do the same thing with an option. And to do that, if we wanted to compare them, yes, one option does control 100 shares of stock. Yeah. So, and if we wanted to just mimic what we were doing, and what's the advantage is that this ties up $945, and we could lose all of it. So this is what we're risking, is $945. With the stock position, we were actually risking $1,600, with the stop loss, but it also, tied up $26,500 and some dollars worth of cash. And so if we wanted to do this with a call, we'd come here to buy, and we're going to do the same thing. We're buying custom with an OCO bracket, only we want to get out. We don't know quite what this will be worth. So we're going to say, hey, if and or when this gets up to $276, Apple does, then sell it. Okay. And you might say, well, this is a form of a swing trade. And with swing trades, we usually say if it loses half its value, so half of $9 is $4.50. So let's say if it gets to the point where it's worth $4.70, we'd like to exit. And you might say, well, then you're not risking really $945. But again, it could gap down and trigger our stop. And then we could get stopped out for way less than the 470. So if you want to err on the side of caution. Now somebody's saying, well, we could do a short put vertical. And you're right, we could. So if we were in our trading a smaller account, a short put vertical is something we might have considered. And so we'd put that in our long call bucket. And then we could compare that to the stock trade. Okay. So yeah, there are several bullish option strategies that could be employed. So stay gold, you're absolutely right. We could do that. But we're trying to focus on patterns here. Okay, so let's go look at AU. So this is a gold mining stock, well, they gold and other minerals, but we can see, we have certainly it's continuing to post higher lows, but we just recently had a lower high and we have earnings coming up. And so some might choose to wait and see, if it breaks back above this diagonal resistance line. It's just something to be aware of as a trader. How about ODFL? You might say, well, this looks lovely. I see this as a bit of a bull flag, but when the flagpole takes less time to create than the flag, it's maybe not an ideal flag, but it hasn't even come back to the 30-day moving average, but it's kind of been just like perfectly marching down this little hill here. And it doesn't mean that the uptrend is over, but it is pausing. And this is part of the transport sector. And so, a patient trader might just say, I'm going to wait and just see. And like someone else, like we were talking about, as I'm having this conversation with me, myself, and I, that, well, we had this bullish harami on Friday at a support level potentially. And that is a candle pattern that doesn't require confirmation. And it is a continuation of, a nice uptrend that started back here in November. So, some traders might be confident placing a trade now. Excuse me. Okay. So that's ODFL. And others might say, you know what, one more day, I can wait. How about Micron? And again, Micron, like in the last 9 months, it's gone from $90 to $455, like extraordinary, just an extraordinary move to the upside. And then it's kind of consolidated a little bit. If we come, I'm just trying to get as many as I can here. It's just kind of consolidating. And so again, some might look for that diagonal resistance breakout. Did we look at Lam already? Yeah, we started with Lam. Okay, how about INTC? So this one has had, a few little ups and downs, hasn't it? But, we had this 5460 hit. And, it's been kind of, lower high. We're not really seeming to break back out, are we? And then if we want to make this just a shorter time frame, we're still posting higher lows, but we haven't got the higher highs to play along yet. So we're waiting. We're playing the wait and see game. How about FCX? So I don't know that we still have this FCX trade on, but if we do, we're probably not very happy campers, because, we certainly posted a lower high here, but we're still posting, higher lows. And another stock that's, doubled since, what's this one, since September. And so a patient trader might just say, I'm going to wait and see if this continues to move to the upside. Oh, Goldman Sachs. Okay, I'm going to just clear this. I think we're out of all these trades. Not sure. But again, we're now seeing kind of lower highs cropping up here, right? And then similar lows. slightly higher lows. And so is this another one where we might say, well, it came down to this, same, like here, that we closed this day at 890.41. It opened this day at 894. So a $4 range on a almost $900 stock. That's, and these support and resistance levels or ranges is pretty tight. And so, could you do something similar? Now, this is a $900 stock, but you could say, could I go from 917 to, 955 kind of range and just do a short-term trade within the pattern? And yeah, like we could. So someone's asking about Google. If there are other charts you'd like to look at, just type them in and we can look at some different charts. So here, if we look at Google, I'd want to draw a straight line on that. Like, has it broken that support level, this previous support level? And it's come right down to it. But I kind of look at this and some might have a concern that we had a higher high. If this bounces, if it doesn't come back up this high, could it be setting up a head and shoulders type pattern? Is that possible? Now it might just come up and keep on going. And with this pattern, you might want to wait for confirmation that this support level is in fact holding. And you also, if you were, looking for the opportunity to do some type of trade, you might also say, well, and I definitely want to see, a diagonal resistance breakout, which if it moved to the upside tomorrow, we'd have that, even though it's still trading below the 10 and the 30-day moving averages. Does that make sense? And do you see what I see? Sung to the sound of, do you hear what I hear? The Christmas carol. Could this be this setting up? Like, who knows? Because we're missing this whole part. And then it would have to break below. So that might never happen. It might just, come up, come down, and then keep going up and turn our frown upside down. Yeah, we won't know. So my crystal ball is at the shop. Okay, so what else can we have a look at here? AEP. Oh, somebody said NVIDIA. Okay, let's look at NVIDIA. I actually had this one on my list. So yeah, we're seeing, like, when we back up and have a look, like, because this first one happened last September, we had a low, came back down and hit it again and again and again. So it is a series of slightly higher lows, right? But then we came up here and hit this high back at the end of October, beginning of November, and we haven't made it back up there yet. So, like, if you were drawing lines on NVIDIA on a regular basis, which a lot of people do, you might have drawn a line kind of like this originally. And then you thought, well, it did break out, came back and came all the way back down. So I guess this line didn't really hold, did it? Came up. So now it's come up and spent some time up at this new line. And we redraw lines all the time. But you might say, well, I'm going to see if it breaks this diagonal resistance line. And we have earnings on the 25th on this one. How about ANET? Okay, hey guys, I shouldn't have bothered looking anything up. I could have just talked to you guys, in the class. So, series of kind of higher lows, right? Low, higher low, higher low, but definitely we got some lower high action happening here too. And pennant patterns like this one started setting up in October and we're still in the middle of it. And so if you see a pattern like this, like, could we have traded this, placed a trade here, a conditional order, and said, hey, if this goes up, let's place a bullish trade and put our target around this, what, 143 something level? Would that be? And, would it have hit it? It would have. But, now it's already come up, hit it, and, might hit it again. But there we are. Let's look at AEP. Was that ANET we just looked at? Yeah, AEP. So here was one, and I prefer to look at current examples. But, we had this, you could draw from all the way back here, or, depends on what kind of length of time you're trading within. But this definitely had a diagonal resistance breakout to the upside. And, some might say, well, I would have drawn my chart, my line, more like this to get this one in the game also. So I would have drawn it like that, and you had a breakout on this day. And had we traded it, like even put a conditional order in to say, hey, if it goes above this high at 122.59, get us in, you might have caught your breath when you got in the next day at 124. But, today it hit 132. Not too shabby. Yeah, Sharice is saying, I'd like to, download all your trading knowledge. It would be so much easier. The first person that I ever heard talk about trading, I wanted to do, I called it a Vulcan mind meld, like, because he just seemed to know so much. And he did. Yeah. Yeah, like, so are we going to be concerned about this gap? Well, it gapped up and then it kept on going. But sometimes it'll come back and fill the gap and come all the way back down and retest, old resistance becoming new support. So it happens. Gaps happen. I mean, it happened here, and then kind of went sideways, pulled back. So this is why it's important to have an exit strategy in place, like, when you're getting out before you get in. And you might say, well, like, I'm a trend trader. So like if I looked at, we've had so many that have done so well, like Albemarle, if I had bought it back here as a trend trade, my stop might have been here. And it's like, well, as long as the trend keeps going, I'm going to stay in the trade. Well, how do you define trend no longer going? Well, you might say, well, if it comes more than 3% below the 30-day moving average, I want out. So had we bought, say, here, our first stop might have been here. And when it came down and crossed that 30-day moving average, we might have moved it up to here. And then it kind of went a little bit sideways and came down. We had a higher low, moved the stop up to here. Now we're moving the stop up to here. And on this day, when it closed below the 30-day moving average, we might have moved the stop up to here. So yeah, like if we get stopped out, we're now out at maybe what, like 157? But our first stop was at maybe 60 bucks. So we're trying to protect some of our profit. And with a stop loss order, there isn't a guarantee, but it's a way of managing it, and we stay in the trade until the trend, no longer is uptrending. And we've got this, and today, if you're really following along, you might say, well, I'm now going to move it up because it came back and closed below the 30-day again, so I'm going to move it up to here. You'd just be moving it a smidge, but you might do that. If you're saying, I'm diligently following my rules, and my rule says if it closes below the 30-day moving average, I'm going to move my stop up to 3% below that. The low of that day. Okay. So guys, that is pennant patterns and how we might use those to make decisions on when to get into a trade, when to get out of a trade. We can kind of sometimes trade within the pattern. If we wanted to set a target, like on this one, You know, that's a $38 move. If it breaks out, we might say, okay, our target is going to be $38 to the upside. And that's where I'm going to put my target. Okay. So that's what I had for you today. So we have 5 minutes left. What did we do today? Well, we put an alert on Lam. I think that was the first one we looked at. And then we placed 2 trades on Apple. One was a long call with a target, and the other was buying shares of stock. And we put both a target and an exit on those. Next week, we're going to talk about those head and shoulders patterns. We're going to talk about inverted head and shoulders. We're going to talk about double bottoms. We're going to talk about channels and all that good stuff. So keep coming back. If you're new to this, I want to welcome you and know that you can go to the archives and watch these, at your leisure. Okay, and they are in a 9-week series. You're also going to want to hit the like button. That helps move this up in the YouTube algorithm so that more people can find this content. You'll want to subscribe to the channel and then make sure that you follow Connie and I in the land of X. My handle at Barb Armstrong CS, Connie's handle at Connie Hill CS. And then I'm now lurking on LinkedIn as well. So you're welcome to come and find me there. So guys, that's it for me today. Have a really awesome rest of your day. Up next is Mike Fairborn with Swing Trading. Take care, everyone. Bye for now.